Is the 4-year cycle dead? We have Lynn Alden as well as Kathy Woods speculating on what's about to happen to the crypto market here in 2026. There's a lot of people that are very bullish about all of the things that are happening currently for crypto in general. Globally, we're also going to explore XRP news and information. We have some new index funds launching on deck that represent more XRP that's going to be bought off the open market. And we're going to check in with Jay Claver and some other things towards the middle of the video. Let's get it.
So are you in the camp of 4-year cycle still on cue, no real change in how these cycles have gone in the past, or do you think that has shifted some?
My base case is the 4-year cycle is no longer really relevant. It arguably hasn't been relevant for the past cycle either. Early on, whenever the supply halving happened, that was a very big change to Bitcoin's kind of new supply coming out. Whereas now, the annual supply inflation rate is well under 1%. It's a lower supply growth than gold as on a percentage basis. And so I don't really view that as like the main driver anymore. I think there's potentially some selling around the psychology of the 4-year cycle.
Is this a time to DCA? Bitcoin trading literally as we recorded around 90K. Is this a DCA time for Bitcoin?
I think so. And almost by definition, if someone's dollar cost averaging, it's always the right time. That's the kind of point, is you're not really trying to time the market. I think it's more of a question of, is it time to accelerate the DCA a little bit? Generally speaking, when the sentiment comes off, we've seen the Bitcoin Treasury MNAVs disappear. We've seen some of the metrics I look at, like market value compared to on-chain cost bases, that is compressed quite significantly. Right. Makes it a lot more attractive. Overall enthusiasm is elsewhere. It's on AI, it's on gold. Public sentiment around Bitcoin is pretty low. I generally think this is the time to lean into it now. But I think as a larger slice of a portfolio, I think it makes sense to buy the fear rather than kind of buy the enthusiasm.
We've always seen when the fear is in the streets, that is a great time to buy. When the greed is high, that is the time to be weary. Obviously, I am not trying to time the top and the bottom of these markets. I know that if I just buy and hold over the next few years, that my assets that I think are going to be valuable will have that moment in the sun, and those utility prices, ooh, I'm looking forward to those. Now, here's Kathy Wood talking about the 4-year cycle. I think it's really important to check in with these two people who have a lot of knowledge about what's going on with the current crypto market. Let's check this out.
Bitcoin is behaving more like a risk-on asset. It has played the risk-off role at different times during the European sovereign debt crisis, during our regional bank crisis. But right now, it's risk-on. It is climbing another wall of worry, and that is the 4-year cycle. We think the 4-year cycle is going to be disrupted, and what I mean by that is Bitcoin regularly dropped 75 to 90% in its early days. The volatility is going down. It's down about 30 some odd percent. And I think there's a fear of the 4-year cycle. We think that the move by institutions into this new asset class is going to prevent much more of a decline. We may have seen the low a couple of weeks ago.
So what Kathy Woods is saying here, in previous cycles, we've had the bull market where prices roar and soar, and then the bear market where you see sometimes 70 to 80, even 90% retracement on some assets, because these institutions are now coming in and buying in 401ks and retirement plans. We probably won't see as dramatic drops in prices. And Kathy Woods is saying here, we have seen the bottom for Bitcoin and it could only climb up from here. Obviously, Kathy Woods is going to talk her book and say what she needs to say, but I do think there's a lot of bullish momentum going into next year. And at the price of 100 grand per Bitcoin, when are institutions going to say, should I buy one Bitcoin or should I be buying XRP? I can buy a lot more XRP. Well, they can pay 50,000 XRP right now to almost one Bitcoin, 45,000. What do you think is going to have more value in 5 or 10 years? The one Bitcoin or the 45,000 XRP? This is what institutional investors are looking at in Wales, and they understand that XRP might be the better buy in this current situation than buying Bitcoin. Now, on deck, we also have a Wisdom Tree Index Fund that is going to represent 19% of XRP. And of course, we have all kinds of different companies now putting together index funds. If you're not familiar, are a group of assets. It could be Bitcoin, ETH, Solana, XRP. It could be 10 assets. Whatever it is they decide to put in that index, it'll represent a certain amount of share of that asset. So if XRP is included, it could be 5%, it could be 19%. But this will also allow a lot more, millions more XRP to go into these funds. Here is a Bitwise fund that represents 5% share of 1.25 billion. This is going to put another $64 million into XRP, buying it off the spot market. Now, here's some of the index funds that are launching. Of course, we just talked about the Bitwise 10 crypto index with a weight of 5.17% for XRP, and now holding top 3 Bitcoin and Ethereum. And of course, we are going to see a roughly $64 to $65 million in XRP being bought up. Franklin Templeton ETF, easy peasy, which is going to represent Bitcoin, ETH, Solana, Doge, ADA, XLM, and Link. And so we are seeing all kinds of different index funds being pushed forward. Some represent XRP and some do not. Now, here is Jake Claver on exchanges running dry of XRP.
XRP not going away from retail. It's being rerouted, abstracted, and gated. Cold storage, more essential than ever. Yeah, I definitely would get your assets off of exchanges as soon as possible. Coinbase is down to like almost nothing for their XRP available to retail. You've got other exchanges lowering their liquidity for retail on XRP. Robinhood is suppressing your ability to make withdrawals. Get your stuff on a cold wallet. And again, if you want to leave it over there on Caleb and Brown, that's your prerogative. I would highly recommend a cold wallet. And again, everybody asks me what cold wallet. I say decent, but there's a lot of good ones out there. There's Tangem, Arculus, EliPal, Trezor, like it goes on and on and on. The only one that I don't use is Ledger. And it's for many reasons, including the UI and just how cumbersome it is to use.
All right, guys, I will have links in the description for Decent's deal still going on, as well as Ledger if you want to support that. Jake doesn't like Ledger. I have no problem using Ledger. I think some of their technology is pretty cool. I have all of their new wallets, and let me tell you, they have leaps and bounds off of some of their older technology. So XRP reserves on exchanges fell by a massive $1.32 billion from November 10th to December 10th. $1.32 billion in XRP has vanished in 1 month. What do you think is going to play out over the next 6 to 12 months? We are going to reach a point where there's not going to be enough XRP on the market for the demand. And once that kicks in, the staircase to Valhalla at XRP is going to be upon us. Check this out.
If we look at this chart here for XRP as well, which is a very sort of similar sort of fractal, and it shows this staircase. And I've tweeted this on X, and it's called the staircase to Valhalla. Okay, and you can see that evidently XRP has been accumulating, breaking out, reaccumulating, and is now looking for a decision, potentially where we've got this markup phase, which takes it to double digits. Now, I've marked 2 sort of scenarios. One is where we actually deviate below and come to fill in the wick from October, and we actually lose support here, and again put the fear into people's minds, when in fact if we do actually come back to this sort of territory which sits at sort of $1.42, you'll notice that it actually ties up with the highs and the candle closes of May of 2021, and that's exactly where this wick from October has actually found its level of support. So if that wick does tend to get filled and we do see XRP get a sweep, then in my honest opinion, this could be a massive spring leading into sort of Q1 of 2026 that would bring XRP right back into this accumulation sort of block, the trading range, and then go for the markup push. And that's scenario 2. So importantly with scenario 1, just as equal coverage, we could actually hold the $1.90, which is the vertical accumulation support in this accumulation phase. We could actually hold that as support here, build up for another couple of weeks, and then attempt a run up to the vertical accumulation resistance. So there's 2 sort of scenarios, and either way, I think that 2026 is looking to be a prosperous year for altcoins, and I don't think it will be any different for XRP, especially with all of the bullish news, the fundamental developments, the acquisitions, the ETF inflows. It's just non-stop, and obviously this sort of range for the last year has just got people right on the edge of their seats and panicking, when in truly this could be one of the biggest opportunities for XRP if you missed out prior to the run in sort of November of 2020.
Listen, I know there's a lot of people in my life that just started accumulating XRP. I go to a friendly poker game once a week, and I've met some truly incredible people there. They didn't own XRP until they met me. Now they're involved in understanding the news and information, and they're so bullish. I was just talking to my friend earlier today, and he's praying for prices to dip a little bit more so he can add to his bags. Let me tell you, if XRP goes below $2, like 175, 165, I will be buying like a madman, because I keep hitting my goals and then I keep extending my goals for XRP If I can somehow start accumulating even more, guys, I consider that an absolute opportunity for the rest of my life. Like, this is the time to get in the game, to learn, to know what's going on, and I will keep you updated. We are doing 3 to 4 videos a day right now because there is so much news to cover. And I just want to thank you for being on this journey with me. We've turned this channel into the most watched XRP channel in the entire world for views. And that is an incredible honor, and I do not take that lightly. So thank you for choosing this channel over a lot of others. All right, so Lord Belgrave claims to be an ex-City London banker. We talked about Lord Belgrave a lot. It says, I need to choose my words carefully here. What I'm about to describe comes from a meeting in Brussels between senior bankers and EU policy makers that is intended to remain highly confidential. I'm sharing this with you in principle, not as disclosure of protected documents, but because the direction of travel is now impossible to ignore. The digital euro is being designed for full on-chain trade finance. This will be a strategic architecture for the next generation of European commerce. The workflow presented in the room was remarkable. Ship arrival, the moment a vessel enters port, authenticated geodata and live video feeds are captured and written into a blockchain. Real-world activity becomes a programmable event. Container unloading. As soon as the cargo reaches the client storage, an RFID signature is recorded on-chain. No paperwork, no manual checks, no reconciliation lag. Proof of delivery becomes instantaneous and incorruptible. 3, settlement execution. The moment the chain confirms delivery, the digital euro moves automatically to the seller. No correspondent friction, no multi-day delays, no trapped capital. Settlement becomes a function of mathematics rather than administration. This is the future of trade finance, automated, event-driven, regulator-approved, and entirely on-chain. And here is the part that matters to us. During that meeting, one requirement was emphasized repeatedly. For cross-border functionality, the digital euro will need a neutral settlement asset capable of bridging currencies and supplying liquidity with instant finality. XRP and the XRP ledger were referenced as the leading architecture to fit this profile. Remember, you're going to have all of these different currencies, and the EU especially has tested the XRP ledger extensively, and they know its capabilities here. Europe is not improvising. Europe is engineering a new financial standard. The digital euro will not run on outdated rails. It will run on blockchain settlement networks that can process real-world events and execute payments at machine speed. If you were never meant to see the full scope of this yet, but you deserve to understand what is coming. Now, understand this, when trade happens, when goods reach the port, it takes days for those payments to clear. The goods have to sit on the port while the money clears, and then it can go to the next one. If that even takes 3 days, if you ship one thing into a port per month and it's 3 days, you can lose an entire month, right? 12 months, 3 days, you're talking about 36 days that your supplies and stuff will just sit on the dock. If you can get that, think about how much more business can be done with instantaneous settlement and between currencies. And XRP was positioned, and it still is, to handle global settlement liquidity. More liquidity for the XRP ledger. People still think XRP is competing with stablecoins. Stablecoins are the vehicle. XRP is the engine. One moves value, the other settles it. This is the time, guys. Keep learning, keep growing, keep spending the time. Your education is everything right now. Thank you for spending this time with me again. I'll see you next one. I'm Crypto Sensei.